Get ready, because a massive overhaul of Nigeria's tax system is on the way, and believe me, it's going to affect your wallet. Starting in 2026, the rules of the game are changing for pretty much everyone, from individuals to the biggest corporations. So let's break down exactly what this new Revenue Act means for you.
Yep, January 1st, 2026 marks the beginning of a whole new financial era. So what does this actually mean for your personal finances and for businesses all across the country? That is the big question we're going to answer right now.
All right, first things first, this whole reform kicks off right at the top.
We're talking about a new name and a completely new mission for the country's main tax agency, which really signals a massive shift in how revenue is going to be collected and managed.
So say goodbye to the FIRES, the Federal Inland Revenue Service, and hello to the NRS, the Nigeria Revenue Service. Now this is way more than just a simple rebrand. It really represents a fundamental change in both the structure and the whole philosophy of collecting national revenue.
So why the new agency? Well, the whole point of the NRS is to create one single, unified body to handle all federal revenue. The idea is to slash all that red tape and just streamline everything, making the process way more efficient and transparent by pulling duties that were once scattered across a bunch of different agencies under one roof. Okay, so a more efficient system at the top is great, but let's get down to brass tacks. How does this reform actually affect you as an individual? Let's dive into the key changes coming to personal income tax. And this is a big one. The new act introduces some major relief, especially for low-income earners. From 2026, if you earn 800,000 naira a year or less, you will pay zero income tax. That's designed to be a direct boost to the take-home pay for millions of people. So just to put that in perspective, the tax-free income level is jumping up from around 500,000 naira to that new 800,000 naira mark. That's a pretty significant jump. At the same time, for high earners, the top tax rate is being standardized across the entire country at 25% for anyone earning over 50 million naira a year. This creates a much more uniform and predictable system for everybody.
But you know how it goes. With new benefits, there are also some new requirements. The government wants to make sure everyone is part of the formal system. And a huge part of this reform is your Taxpayer Identification Number, or TIN. And listen up, because this is about to become an absolutely essential part of your financial life. Starting in 2026, you're going to need a TIN just to operate a bank account, hold an insurance policy, or even trade on the stock market. It's really the key to bringing everyone into the formal tax system.
Now let's switch gears and talk about the engine of the economy, businesses. The new act brings a real mix of some pretty significant tax relief on one hand and new obligations on the other, all designed to make things simpler and really kickstart economic growth.
Okay, this is a huge win for small companies. The bar for being completely exempt from company income tax, capital gains tax, and the new development levy is being raised a lot. This means a whole lot more small businesses can now keep all their earnings to reinvest in growing their business, hiring people, and innovating. And it's not just small businesses getting a break. For medium and large companies, there's a direct tax cut. The main company income tax rate is dropping from 30% down to 25%. The logic here is pretty simple. Lower taxes mean businesses have more money to invest, expand, and compete, not just at home, but on the international stage too.
Before this new act, if you ran a business, you had to deal with this complicated web of separate levies on top of your main taxes. You had a levy for education, another for IT, one for science, another for the police trust fund. Honestly, it was a huge compliance headache.
Well, all of that complexity, it's being swept away, gone. All those separate levies are being replaced with one single, straightforward 4% development levy. This is going to make tax calculations and planning so much simpler for companies of all sizes. But, and there's always a but, right? It is not all tax relief. In one very specific area, companies are about to see a pretty significant tax increase. Whoa, yeah, you are seeing that right. The capital gains tax for companies, that's a tax you pay on profits from selling assets, is tripling. It's jumping from just 10% all the way up to 30%. The goal here is pretty clear, to line up the tax on asset sales with the main corporate income tax rate and close what some might see as a loop.
Now one rate that's staying put is VAT. That's holding steady at 7.5%. But, and this is a big one for businesses, the compliance clock is ticking a lot faster. The deadline to file and pay your VAT is moving from the 21st of the month down to the 14th, and they're bringing in stiffer penalties for being late to encourage everyone to stay on schedule.
Okay, so we've been deep in the weeds with all these individual changes, all these numbers and rules. Let's pull back for a second and look at the big picture. What is the grand strategy behind this huge reform?
When you boil it all down, the 2026 Act is really a balancing act. It wants to give real relief to low-income earners and at the same time boost business growth with better tax rates and simpler rules. And to make the whole thing work, it's tightening up compliance with things like mandatory TINs and stricter deadlines, all while making the tax system the same across the entire country. So, this is the new landscape, a complete overhaul of Nigeria's tax system, creating a new balance of relief and responsibility. It absolutely has the potential to reshape the country's economy. The real question is, will it actually deliver on all of its ambitious promises? Well, starting in 2026, we're all going to begin to find out.